Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 1.6% there. On the S&P Nasdaq 1.5%, semiconductor 2.4, Dow 1.5, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are red today. Bitcoin, gold, silver, miners are all red. Dollar up, oil down, treasury bond flat. VIX popped about 9% there. Let's do with S&P 500 ETF. Spider! 65-minute chart here. So this is where we closed on Friday. And looks like we actually saw a down gap this morning here. You can see it's a pretty sizable down gap. Bulls trying to fill that down gap. They failed to fill the entirety of it. You can see about 50% of that down gap there. Keep in mind, we've been talking about the 400 and 410 vicinity. This was a down gap, big down gap. All the boss bears are making sure to protect this. They got all the guns out. And you can see even last time when the bulls got up here, this was what? Back in mid-November. And bears made sure bring the price back down. Bulls tried it one more time last week. And yet again, bears are working overtime, making sure that they can't get any of this big down gap here. And so with that, with the down gap, you can see how quickly bulls not able to advance. And all day long, with the down gap this morning, market deteriorated it all throughout the day here, currently trading around 395. It came down to that gap area here. That gap was open back in 22nd. You can see a little bit of that gap that's still remaining here. We found a little bit of support right on that vicinity. It'll be better for the buy sellers if you go down and completely fill that up gap and not to play around with that, because sometimes when the gap doesn't get filled, it could act as support. Keep in mind that my short-term moving average that did act as support back in the 17th of November. We're sitting just kind of right on there, as you can see. So unless bulls can find some movement quickly early tomorrow morning above the short-term moving average, chance that we may retest the 399 midterm or the micro-term moving average here. Dealing with, however, this double top here, what I call M pattern for potential murder. So this M pattern is only gonna be fully confirmed if you can break below the neckline here, which is currently at 390. So you can see, I'm going to go back and tell you guys a little history of this M pattern. You can see this was back in early October. You see that little double top here. That's the neckline. It gapped below the neckline, and this market tanked for entire week. Bulls managed to make a move again here for several weeks. Another double top here. Again, that's the neckline right there. Neckline, double top M pattern for murder. Once we broke below the neckline, we did see about a day or so of downturn and shenanigan volatility for 2 days. However, this was in early November, we did see that midterm moving average and the long-term moving average acting as support. So once that neckline was broken, bears were only able to bring it down for a day or two. And then you can see we found support yet again on that midterm moving average and the long term, and we're back here. My midterm is currently residing at 388, so there will be some battle going on because bulls, their troops, a lot of their troops are hanging out in that vicinity, making sure that they want to protect that midterm, because remember, the midterm is very significant pivot, resistance, support, crucial support in mid-November, as you can see, and that's all here. So you can see the entirety of that 390, 385 vicinity is going to be important support and huge battleground. All the strong buyers are hanging out in that. It's just like how boss bears are up here, protecting this level, and bulls are protecting this level right now. So for this M pattern to play out, obviously that neckline 390 has to be broken with strength to the downside. So check out that oscillator. So, with that slight bearish divergence right on that 404 resistance, a down gap area, you can see lower high there on that oscillator. It rolled over actually this morning as I tweeted out, several hours after the market opening, and with that, this market straight up tanked afterwards. And you can see though that oscillator pretty much got down to that level where we did find support in mid-July. Again, that's the same vicinity with that short-term moving average. So here's my proposal. Unless bulls can make a quick move early tomorrow morning and get up and, kind of retest that micro term, going into tomorrow, sentiment is bearish. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening glow trading tomorrow.